In this video, we'll cover setting stop losses within the crypto market. I'll share some rules of thumb that I follow, and also I'll share with you a tool that allows you to set up a trailing stop loss, a bunch of different profit scenarios. It's a pretty cool tool. You've probably seen me talk about it before. It will be linked down in the description, and that is an affiliate link, so I'll be upfront about that. It's an affiliate link, but it's a tool that we use on quite a bit of our trades. So here's how the best way to start this on talking about stop losses in the crypto market. I'm not going to talk about risk or reward. I'm not going to talk about profit levels. We're going to just focus on how to figure out where to put your stop losses or how to start thinking about it, okay? This could be an hour-long video. It could be longer than that, but I'm going to try to make it less than most of my videos, okay? So let's start with my general rule of thumbs that I use that I think make the most sense. And we'll start with first, a 2% stop loss is a good stop loss if you want to verify a trade that you're in, meaning that if you're buying a downtrend, I know it's buy the dip, but I really hate that phrase. If you buy a downtrend or you buy a breakout and you want confirmation pretty quickly that you've been right, a tight stop loss of 2% is a good stop loss to give you confirmation, okay? The crypto market and most assets in crypto are highly volatile, so 2% means that you will get confirmation usually pretty quick, right? You'll get confirmation if you've been right or you're wrong pretty quick, okay? The next level that I'll look at is a 3 to 8%, and this differs per, we'll get into charts here in a second, but a 3 to 8%, okay? For most, and the volatility of what you're trading will matter, but 3 to 8%, if you're buying a breakout or you're buying a downtrend, that usually works pretty well. I'd say if you want air quotes a sweet spot, that would be a sweet spot of where I would say most people, their risk tolerance and the changes in market volatility protect you and give you the highest opportunity to reach profit levels, okay? And then there's the 8 to 15%, okay? And I'll cover each one of these and why you might want to do some of these. The 8 to 15 is when you're looking for those long swing trades. You're looking for those longer term payoffs, and you know that the chart that you're trading, the asset that you're trading is just more volatile. So when you have that 8 to 15%, you're looking for a higher upside, obviously, and you're going to be in that trade longer. So you're giving it a little bit of volatility to the downside than you're probably comfortable with if you're just going to be out of that trade within 2 or 3 days, okay? So those are the general rules of thumb. The first question many people ask is, should I really trade with stop losses? Is it really necessary? Yes, it's absolutely necessary. You should just not be a hold when you could buy cheaper, okay? If you buy something and it goes down 10% and it keeps going down, you could have bought cheaper. So it's just you need to get into the mindset that in trading there's losses, and in crypto market, in a highly volatile market, you have to be able to understand that and really design a system that has losses in it. I talk a lot about this in my training, but just in general, that's just how you need to start looking at it. So let's jump into the charts and let's actually look and see how you actually analyze something for stop losses, okay? So we entered a trade on sub here, and we're in this trade right now, and I'll set up the stop loss in the tool that I mentioned. And we bought here on this downtrend. It's been on a downtrend about 13%, right? And we bought here because we saw various support areas, and there was a likelihood we thought that it might actually bounce back from here. Now, the whole crypto market in the last 48 hours, it's kind of been weird. It's always weird, but it's been declining, and it's looked like it's going to get worse here. So we're going to look and see, where do we want to actually exit this trade? So we actually entered right around here, right? And what we want to do is we want to say, okay, well, where are the various support points? Where are the various places where we would expect price to actually have some support and bounce from, okay? And at what point do we want to get out of this trade? Because all of our analysis, everything that we reasoned just is out the window, right? So I'm not going to talk about the target levels or anything, but let's just say that we targeted 9%, okay, here. So the first thing that you want to look at is look at the day, right? Look at the daily chart. See where you're at on the daily chart. Now, you should have done this before you bought anyways, which we did. So you look at the daily chart and you'll see that there's been a run up here on one day. And then now the support did line up right around where you would expect it here, right? Typically on a run up like this, you're going to see support kick in just over half, sometimes at half, but usually just over half of the actual close. So it closed here and then it actually, you know, found support and traded in this range. Now it's also gone down. So now the expectation is, okay, well, where is support now, right? And what do we want to do? We want to protect our downside, because if it goes down too far, then why don't we just buy cheaper, right? So once again, every trading plan should have losses built in, and you should be able to backtrace it and look at it and say, okay, yeah, if I lose this amount on my wins, it more than makes up for it, right? That's the way to look at it. So let's put in our support. So we're doing this on a higher time frame, the daily, remember? So here's the first support. I want to put that a little bit closer to where it's actually at. And this is where price bounced off of, right? And it started moving on. Here's another support level. And then go down to a different time frame, or lower time frame, I should say. We're at the 12-hour now, okay? And you want to do the same thing. You want to say, well, where are the support and resistance areas of this actual asset, right? Here's one. There's a support and resistance area right here. Okay. And then go down to the 6-hour. Do the same thing. You'll notice these support and resistance areas, of course, are holding up, but you're getting a couple more, right? So I'm using the ray, and I'm just drawing in the ray where I find support and resistance lines. Okay. And then now the 4-hour. And if you've watched any of my other videos, you know I usually say you should, at a minimum, trade on the actual 1-hour, right? Trade on the 1-hour at a minimum. But the lower time frames are great for rejection points. So what I mean by that, and I'm not going to get into this into big detail here, but we're on the 10 minutes. There's not a lot of rejection to the downside. There is some. So there's some rejection. There's rejection here. There's rejection here. But it looks like it might be trending down. And I can almost guarantee what is happening right now is there's a wall. So see, there's a sell wall up. It's the crypto market. It's the way it is. You either, deal with it or get out. That's really the way to look at it. So there's a wall up there, and it has no intention of going through, but it is driving down the price. Just the way it works in the crypto market. Okay? So as we look at that, we've drawn our support lines, right? Just roughly. And now it's just a matter of looking at the 1-hour time frame and saying, okay, well, let's see how many support lines there are at various support levels. Remember, I said if you want to be verified quickly, 2% puts us right here. 2% puts us right here. And if it broke this support line here and this support line, that is from before, right? This is a support line from before, then we've been wrong twice. As we move it down all the way here to this tick mark, to the 4,600 range, right, of Satoshis, that is 5.6%, all right? So that's in the mid-range of what I said for a trade, right? So one thing I didn't discuss is how long do we want to be in this trade? Well, we want to be in this trade. Actually, I anticipate that we can possibly look at right around 15% for this trade, okay? If we wanted to be a little bit more safer on our exit, we could say below this mark and say 14.3, okay? Now, this is a test trade. We're testing a new scanner, a new strategy. This scanner said basically in the next 24 to 48 hours that this is going to turn around, okay? That's what the scanner said. So we're testing this strategy. I don't even know how many units of this we bought. I think we bought 150 units of sub, okay? So let's go set our stop loss, okay? What do? We analyze this, right? Hopefully this is helping. But we analyzed this and we said there's a support zone here. So obviously if it hit here, we've been a little wrong. If it hit here, well, we've been a little bit more wrong. If it hit here, well, this is a heavy support area we would expect given this chart because it's traded in this range. Remember, well, maybe you don't remember. In my training, I cover support and resistance in great detail. And one thing about support and resistance is that it's a range. It's not a hard, fast bar. It's not a brick wall. It's elastic, right? So this range is support and resistance, this whole range. So you would expect a fight of price action in this range. So we're below that range, okay? Now, ideally, yeah, we would have bought here, but you never know when these are going to turn around. So you don't try to time top or bottoms. You just look at your risk management and you trade accordingly, okay? So we're going to put a stop loss right around 5.5%, just so that we can, we'll say just below this mark here, right? This actual Satoshi level. Just so that, so we'll say 6%, just so that we can be below that, because sometimes it does reach below that and then shoots right back up, okay? So let's go to our tool and let's go through how we would do that. So we already own sub, so let's look for sub. And we'll, I think we said 150. Yeah, so 150. And we'll put in our actual buy price. We actually didn't buy as well as the price is right now. So we bought a little bit higher. And we're going to put, so we put in our buy price right here. We're going to put in our stop loss at 6%. And we're going to target a 14% profit with what is called a trailing stop, or a trailing profit, I should say. And this trailing profit, what that is that it gives you deviation on the price movement so that you can make more. For instance, today we put a profit level of 10% and we got cashed out at 15. So that's not bad, right? That's not a bad additional profit from something to just set just a standard price. So this is a trailing stop, meaning that as price goes up, then the stop loss will move up as well, if it does go up, obviously. So now what we're going to do is we're done. We literally just, all we have to do is, actually what we have to do here is just do 125. The reason why we do that is we follow our strategy of creating what we call, and I got this from another YouTuber, Quick Finger Luke, creating free coins. Basically, we don't sell our full position. We actually just bank free coins. And then what we do is when those coins, these 20, so we bought 150 of these, right? But we're only going to sell 125 at this 14%. And then those other 25 will sell when they get up to 30 or 40. That's if they ever do. So it's a good way to kind of, you keep your profits in there a little bit, but you get to really ride some upside to a lot of these coins when they actually moon or they go up in price, okay? So create it, and that's all. Now let's talk about, now I'm not going to go into more trade details here just because we're going to cover just stop losses, okay? So let's look out for something that would be maybe a breakout trade, okay? And a breakout trade is where you see something that looks like it might be breaking out, okay? Aeon's a good example. We like this. We trade it a lot. As you can see here, if we go to the daily, I think you'll see some of our trades. So let's go here. So you'll see, we trade it quite a bit. When the API was working, it showed all our trades, but now it only shows a few of them for some reason. But so you'll see we trade Aeon quite a bit. It's something that I believe in the project long term. It's a pretty cool project, and it's a good thing to trade. So you'll see here, there might be a breakout, possibly. There could be a breakout. And this is where you'd want to put your stop losses at 2%. So let's say this looks like there might be a breakout. You put your stop loss at 2%, just below this tick mark here, where there's a support range. Maybe you wanted to, a little bit more. And what you're looking at there is you want confirmation really quick, right? So maybe you're doing a smaller trade on this, right? You're just looking for a 5% return or 3.5% return or something, right? So you're doing a quick scalp. And what you're looking at is it looks like it's going to break out. It looks like from this actual retracement here, it's actually going to break out. And maybe you want to put your profit up here a little bit more. So right around 4.9%. Looks like it's going to break out from this point, but you don't know for sure and you want a quick confirmation. So you could put a 2%, right at 2% stop loss. So you're going to know real quick. It's going to either go your way or it's not. That's a good way. Now, there is one thing I'd say for, obviously, there's a big support range here, right, below you. But once again, you're just looking to do a quick trade. If you were, this actually might be something we'll look at trading into right now, just because I wanted it to go down more for us to enter this position. I wanted to go down to like here for us to enter the position. But if it's going to break out here, we'll do something like this type of trade. We'll trade this now just because maybe it is going to break out, right? Now, I know this because this whole time there was a sell wall up that drove this price down. So I know that that's what happened here. So because we watch this chart every day, we try to trade it every day if we can, if the opportunity presents. So that's how you would do more of a breakout trade, okay? You would basically get in this position here, and you would have a tight stop loss. So if you're wrong, you're out quick. If you're right, well, it's moving with your rightness. I don't know if that's the right way to say it. But as the price moves up, and let's say you wanted to do more than, you wanted to target this range as a exit, right? So, and you want a really tight stop loss, right? So the instant that you're wrong, you want to be cashed out of that. Well, as the price moves up, your stop loss moves up, right? So it keeps moving up. So let's say it moves up here, it hits resistance, then it goes down, right? Well, you're stopped out, but you're stopped out in profit. And you're stopped out in roughly, 5% profit. So that's not a bad way to trade, right? That's actually pretty good. So this is just examples of how you can really start looking at this and really start putting these things together and putting in stop losses to protect your downside, but then also making sure that you're trading smarter. You're taking the emotion out of trading. Now let's look at a longer term actual trade where you'd want to maybe do a longer actual or a bigger stop loss, right? So Ripple, right? We're looking at XRP right now. And as we look at XRP, you see that it did decline today, and it looks like it's having a little bit of a 1% actual move up. So let's say that it's possibly, as we go in here and scroll in, it looks like it might retrace. Well, it's already retraced back and looks like it's going to go to the upside, right? Now, let's say that you just wanted a dollar cost average in this, right? And you're looking for a long-term hold. You're going to hold this for a year, right? But you want to protect your downside. You want to buy at the best price. So you could just buy here and not stop out. But if it goes below this and it goes below this, which is like 3%, well, most likely you can get a better price, right? And if you actually bought right here, let's look at the support range. Let's go to the actual 6-hour chart. So we're at 6-hour candles. You'll see here, that's the lowest it's been in a while, right? It has been lower. It has traded lower. But that puts you, that stop loss here of 4% puts you in this range where it was back in December of 2017. Okay? So obviously we might be heading towards that. Who knows what's going on, right? It does seem to be that everything capital is leaving the market. Market cap is declining. A lot of things are going down, right? So for this trade, what you're looking for though is you really want to be at, let's say this isn't the best chart, but let's say that you did want to be in this long term and you want to give it room to actually meet that resistance zone. You could say, I'm going to be in here. I'm going to really say that it's going to bounce. If it gets to this point and it goes lower, then I want to be out at 15%. Okay, this is a better way to look at this, right? So you're going to be in this long term. You're going to do a decent sized position. You're going to buy right here. You're looking for an upside of whatever, 90%, whatever it may be, right? And what you're going to do is you're looking for, see, we have some free coins that we're selling at this level once it gets there. So what you'll see here is this is what you would do on a more, not aggressive, but a bigger stop loss, is that you would enter here. Remember, we're on 6-hour time frames here. We can change it to 4 hours. You'd enter here, and then you're going to give it plenty of room to find a base, to play around here, to kind of move around in this area, but you're expecting a long-term return on this, okay? So the 15% in the crypto market isn't unheard of, right? You could put it tighter. On this chart, this is where you probably would put it, just because, look, there is a zone here that you would expect price to bounce from, right? If it gets below that, then the next zone is here, right? And then if it gets below that, then the next zone, this is a high value zone. This is like getting it at basement prices down here. If it gets down here, of course, see, if you didn't stop out, you would be down 50%, 60% if it got down to that level. That's why you want to stop out no matter what. You don't want to be just a holder. Because if you stop out at 15%, you can then rebuy if it gets to the basement level prices. And then you can rebuy with more capital instead of just being stuck in this trade way up here, right? So that's the way to look at it. Hopefully this helps. Let's see where we're at on sub. Let's just look and see. So we're at, negative 28%. So, we might be proven wrong here. And it's a really tough time to trade right now. I can say that. Just because everything's declining. So, we even entered that a little bit soon than we probably should have, a little bit sooner than we probably should have, but, that's trading. So one of the things you can do is you can always look at the chart and exit now. You don't have to stay in a trade too. So if something goes against you now and your gut tells you, I'm just not sure about that, or it just doesn't look right, exit out of the trade. There's nothing wrong with exiting out of trade early. Especially if something turns against you, it's better to get out right when you see something turn against you and you know it and you see it, right? So we look at sub. I'm not quite convinced that it has turned against us yet. But there's still that buy wall, or that sell wall, sorry. Sell wall still up. Still there. All right? And it's going to really stay there for a while, so who knows when it will actually be removed. But there is some actual, it's not much, but there's actual orders lining up, right, to actually buy. So this is, once again, I've been doing this long enough where for me, I'm not worried that it's going to turn against us. And if it does, we're stopped out. But I'm not worried to the point where we're going to get out of the trade right now, put it that way. So we have a couple different kind of resistance zones here, right? Support and resistance zones that we're really looking at, okay? So that's the way to look at this. That's the way to set your stop losses. You see here we're in a couple trades as well. Centers up, and VIB, CMT, and WTC. These are all trades that are, well, not well, but they're within our stop limit range. But just nothing's moving right now. So could turn around tomorrow. That's the way it works. Things go in cycles. So it could turn around in tomorrow, or we could wake up tomorrow and get stopped out. Hopefully this helps on setting stop loss levels. Now, once again, you're looking for support and resistance zones. I'll do more on this. I'll probably do a video on, if you do a breakout strategy, here's the best way to do stops. If you do a retracement strategy, here's the best way to do stops. If you really want to be notified, subscribe to the channel here. You can also join us in the Discord group. There's a link down below. The link to the tool that I used here that is really awesome to use, which is a trailing stop, a trailing profit. It's in the description as well. And same with the charting tool. So definitely check all that stuff out. And I look forward to seeing you in the next video.